Trading futures and options involves substantial risk of loss and is not suitable for all investors. Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago. Today is Friday, October 31st. We finally made it, the last trading day of the month, and the grains tacked on to gains, extending gains for the month. Before we get into that, I do want to remind you, got to get that plug in. If you have not signed up for a free trial of our daily commodity commentary, head over to bluelinefutures.com. From there, you go up here in the upper right-hand corner, select Sign Up. From there, you can submit your information, your email address, most importantly, so we can deliver that information to you daily. Select the markets that most interest you, whether it be energies, agricultural markets, precious metals, indices, etc. You name it, we probably cover it. And if we don't put it out on paper, call our trade desk. We're always ready, willing, and able to help. Again, bluelinefutures.com. Get signed up for that free trial there. Then we will be doing, as usual, our charts from our Blue Line Edge trading platform, which is also complimentary to clients. We've got a great desktop and mobile platform, very user-friendly on that front. And you'll just see how user-friendly it is once we pop up. We're going to start with December corn. December corn futures tested and rejected that 200-day moving average yesterday. That was a big resistance pocket. We kind of outlined that going back to the July gap as well, talking about 432, 434, and then above that, the 200-day moving average. As you can see here, basically tagged it to a T and rejected it. But yesterday's lower price action led to some lower price action overnight, but buyers stepped in, and that's really what we wanted to see. And we talked about this in AgriTalk with Chip Flory yesterday afternoon, how not really overly concerned about yesterday's pullback as long as we see buyers step in to mark higher lows. And that's exactly what we saw to round out the month. Buyers stepping in. So far, we've marked higher lows again. Hopefully that can propel us into higher highs into the new month of trade. For the month of October, corn futures 16 cents higher, so a strong performance there, but probably one of the weaker performances in the grain markets. What performed a little bit better? Jump over to that wheat market. A similar chart setup. We rejected technical resistance in yesterday's trade. As you can see here, the upper end of the range really going all the way back to August, and that's the mid 530s, 535 area. Back tested, took out the previous day's lows, tested the 50-day moving average, which is support, held that, and then rallied back. So again, buyers stepped in at lower prices. That's really what you want to see, and we finished near the highs of the session. Hopefully we can chew through that 535, 536 area in next week's trade or at some point next month. I think if we get out above that hurdle, things could certainly get a little bit more exciting, and you're going to be eyeballing some of these upper levels like this 200-day moving average at 567 and 5/8. That would kind of correspond with those highs there at the end of July. So it should be an interesting start to the month, next month. But for now, we'll just celebrate a good month for the wheat market. Wheat futures, 26 cents higher on the month. So strong performance there. Again, higher lows, higher highs. It's a trend. Also, what we talked about earlier in the week, when you get these grain markets working together, I think that's indicative of more intermediate to longer term trends starting to develop, as opposed to one performing and the other one's kind of being lackluster, which is kind of what we saw yesterday. So there were some caution flags, but today's trade certainly all working together to the upside. Last but not least in the grain markets, the soybean market, and here we've got the monthly candle pulled up here, a whopping 95 cents higher for the month. Thanks in part to some good headlines with regards to trade with China. And one thing we talked about is a lot of bickering going back and forth whether the trade deal is going to work, whether China is actually going to buy enough beans to support prices. I think it's all irrelevant. Look at the chart. Zoom out. The last 2 weeks have been very, very strong, and that speaks, I think, volumes to the market structure right now. So a lot of optimism. Harvest is about 84-85% complete here in the United States. A lot of focus is going to be shifting towards South American weather. I do not think they can afford much of a hiccup there, so I wouldn't be surprised to see that continue to add a little bit of a premium to the market, especially with China coming in and potentially buying more beans than a lot of people were expecting. And a lot of people kind of hating this rally, and I think the hate in the rally only adds fuel to the upside. So I wouldn't be surprised to see these markets continue to mark higher in spite of what some people might think is not fundamentally sound and fundamental value at these levels. So it'll be interesting to see. A lot of opportunities probably on both sides of the market. Just be sure to manage your risk appropriately, especially in the soybean market. Saw volatility expand a lot in Thursday's trade. We traded in about a 44-cent range. That was 3 times the daily, the 14-day average true range. So there is some air under the chart if support does give way. So again, manage risk. You do that with stops. We like using some option strategies to do that if you're trading futures. So if you have questions with regards to that, don't hesitate to reach out to our trade desk. Again, we're ready, willing, and able to help. Then lastly, we'll wrap things up over on the livestock side of things. A little bit of a ho-hum day in the cattle complex. We did get a midday rug pull, which maybe scared some people out of the market ahead of the weekend. We wouldn't be surprised to see more headlines come into the market next week, potentially with regards to the South American border, potentially trade news with Brazil. So headline risk still looming in this market, and I think that keeps the advantage in the seller's court on rallies. I wouldn't be surprised to see more relief from here, but I think relief probably gets sold into. One thing we talked about earlier in the week, much like the stock market has like a Fed put or a Trump put, the cattle market now has, I think, a ceiling in the market from the administration urging lower beef prices. So I think if we do get rallies back towards some of these breakdown points and moving averages, those will likely get sold into. So if you have physical risk, you're going to want to probably look at using that as an opportunity to protect the downside. Same with the feeder cattle. Looks a little bit more like a Swiss cheese piece right now with a lot of holes and gaps above the market. Mid 340s I think would be not out of the question, which is kind of crazy because that's about $20 above the market. But wouldn't be surprised to see a little bit more relief. And again, I think those are probably selling opportunities. Volatility has come in a little bit to start the week. We saw volatility, CME vol for live cattle and feeder cattle at the highest level since 2020, 2021. Don't expect that volatility to go anywhere with these daily ranges just being insanely wide. Yesterday for feeder cattle, that was about $8 wide for the 14-day average true range. And then for live cattle, I want to say it was like $4.50 or so, or right around there. So a lot going on in the cattle complex, probably keep people on their toes. What has been an absolute sleeper? Lean hogs. It's been down in the doldrums, kind of treading water just below the 200-day moving average here in the April contract. But I would note that the CME vol volatility in the lean hog market is at multi-year lows. So that's almost the opposite of the cattle complex. So I think we're probably a little bit overdone technically and fundamentally in the hog market. If you want to play it to the long side, I like using futures and potentially looking at options as a way to mitigate the downside exposure and downside risk. So again, any questions over any of that or anything that we didn't cover, don't hesitate to reach out. Have a great weekend. Have a great Halloween. If you're going out with kids, be sure to sample their candy. Make sure it's safe. And remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.